Welcome to episode 11 of yWeb3, where we dive deep into the ever-evolving world of frontier and emerging technology. On the agenda today, we'll explore the latest developments in the crypto world, including the high-profile arrest, discussing the crucial push for Bitcoin ETFs, and dissecting regulatory proposals for digital assets. We'll delve into concerns about the U.S. interest rates, examine significant registrations in the crypto industry, and also learn a lot about the crypto exchange expansions happening in Europe. Today is September 28th, and here's the market update. Bitcoin is currently at 26,500 and change. The U.S. Fed rate is currently standing steady at 5.5%, and the NASDAQ is at 13,100 and change, down a little bit from last week. Excited for our two special guests today. Let's go ahead and make it happen. Patrick Sweeney, if you wouldn't mind giving us 90 seconds about yourself, that'd be fabulous.
Hey, Jay, thank you so much for having me. It's a pleasure to be here. I'm a serial technology entrepreneur. I started 5 companies with 3 exits. I've been involved with crypto since 2018, mostly in the mining space. My first company was a company called Server Vault, which had the first cloud hosting platform in the world. And that was, 1998, 1999, we started expanding. And so with the data center background, I found it easy to start mining crypto early on. And then, I'm like many other people were really concerned about the energy usage. And I saw it really as more a system design that the way that crypto was being mining wasn't really well thought out. It was just so profitable that people were building these one-off machines, then just throwing them out when they weren't useful anymore. So I set out to change that a little bit.
Awesome. Yeah. And there's so many parallels between Web 1 and that big push and where we are now with Web 3. And I think people haven't even started to come close to understanding what we're seeing here today. So excited to chat more about that. Hristo, thank you so much for joining us. Again, a little bit about yourself so people know the amazing background of what you do in our ecosystem.
Thank you, Jay. And my name is Hristo Piyankov. I come from a background in traditional finance, where I have spent over 12 years as a data scientist, essentially doing machine learning and AI models for traditional finance. And I moved into crypto around 2017. And really, I wanted to bring the data-driven and sustainable approach to crypto. So my company does tokenomics for various projects. Essentially, our focus is to really build the data-driven approach to tokenomics, something that we can substantiate with data and with actual figures. We have worked with over 250 projects in the space, so we have a vast experience across every kind of project, and really this is what we are still doing for 6 years now.
Awesome. Amazing. Thrilled to have both of you. So let's just dive right into the number one story, which I think is just one of the craziest things ever. And I also really want to, state how early we are in this asset class. And, people I hear all the time, if we compare Web 1 to Web 3, you kind of think about that like 1991 through, like 2000 scale. Majority of the adoption was happening right at the end, 98, 99, 2000 is when we started seeing like people, believe the internet's a real thing, and we saw actual businesses get online. I've said for a while that I think that we're somewhere in the 1993-94 cycle. Now this is going to move a little faster because we don't have to have, computers that most people didn't own. It requires a lot of education. But I want to say that the people that are deemed as experts and really that get the most views are completely some of the most chaotic and just utterly insane people that I've ever encountered. And the story goes right now to the Bitboy Crypto. He was very popular during the last bull rush. He's a very colorful personality. But let's be clear, the man's been a criminal multiple times over. And there's no due diligence whatsoever because we're not talking about standard, mainstream media channels here. So what occurred for anyone who missed this, it went viral, 1,000 times over. And give a quick bit of background is a gentleman named Ben Armstrong, who's had a Bitboy Crypto YouTube channel, very popular, millions and millions of views. He was essentially, allegedly, I don't know the law essentially, but allegedly was embezzling from his former company. Of which he founded. They released him from that company. And again, all of this is still kind of floating around out there. But he decided that it would be a good idea to go and sit outside of one of his former coworkers' homes with a gun, and live stream himself retrieving his Lamborghini, what he deemed to be his Lamborghini. And I just want to say this is not uncommon in our industry, unfortunately. Like he live streamed it, but I mean, we've seen some utterly stupid things that have occurred, including Sam Bankman violating, a very basic order to stay off the internet and stay away from crypto wallets. And so now he's in, a maximum security prison because he quite simply just didn't understand the law to begin with. I'm going to start with you, Patrick, on this one, because we've been in, this space for a while. And this isn't even like that shocking to us, unfortunately.
No, it's, I mean, it's really a cult of personality in the crypto space, because I think there are so many people who want, they want the personality, they want someone larger than life, and they think that's going to, they're going to be the next Elon Musk, and it's going to drive a token price or a stock price with it. And it, it's got the range of everything. You've got great people doing wonderful projects in the space, but then you've got assholes like him who just decide that they're above the law and take the law into their own space. And I think it's different from Web 1, really, Jay, because if you think about the most notorious person during Web 1, it was a guy named Kevin Mitnick. And Kevin Mitnick was the world's greatest hacker, and he hacked into everything from the Pentagon to to every major bank. And, he was arrested and did time quite a bit, but then he turned and ended up becoming a security consultant for the US government and showing them how, you could be breached and where their weaknesses were, and ended up, creating a pretty big company out of that. But it, I mean, it just seems like he was certainly nonviolent. I don't think he was ever one to carry a gun around and threaten people. But it just seems like with Web3, the crazier the personality, right? And with social media so prevalent now too, you get 60 seconds on TikTok and you're building an audience, right? So I think that's a little bit of the difference.
And listen, as someone who wants nothing to do with having any type of personality, such as myself, I like to, report what I see. I like to, learn and educate myself and the audience, which is what we do. And, we get respectable views, anywhere from 10 to 50,000 per show. And I think that's a good amount of people wanting to learn about regulation in digital assets, but Hristo, you come from a traditional finance background. And I think the worst that we ever have to worry about is just Jim Cramer, with a horrible track record of picking stocks. But I mean, there's restraint on what he would do and what he wouldn't do. I mean, in crypto, that's not even the worst thing we've seen this year.
Oh yeah, not by a long shot. And funny you just mentioned regulation, and actually I know that there is a general movement in the crypto space who are not very welcoming to regulation, but I really feel that at least some basic level where we can weed those kind of guys out, it would be really, really beneficial, because at the end of the day, quite often I go and sometimes talk with some of my former colleagues in the banking section, and the general feel for them is when I go there, but they ask me, but isn't crypto all scam? And I'm telling there are serious projects. We are tokenizing real world assets, we are adding enabling liquidity and so on and so forth, and then they come and show me a video like this, and I need to explain somehow that this is the exception. They are the loudest voices, but they are not the standard within the space. And I'm really struggling with this one, especially because this is and it's absurd. This guy has a token, and there are people purchasing the token. For me, this is totally crazy. I haven't seen the tokenomics on it, but I'm sure that that it's absurd.
Don't worry. He rug pulled everyone a while ago on this thing.
Jay, let me jump in there too, because I think regulation is so important, and I've been saying this for the past 5 years, that we can't have a financial system that's a free for all. So we should want regulation. I think anyone in the space should be saying, look, this is an industry that definitely needs adult supervision. It lacks it now. The kids are running wild. So we've got to get in there and put some structure around things. It doesn't mean, it's the end of speculation. It doesn't mean it's the end of DeFi, but that's the extreme case. If we proactively control and try and support legislation, we can keep the worst from happening on both ends of the spectrum.
And I'm going to throw out a very controversial statement that I've said a few times, and I don't mean it as a knock on anyone that's been developing or anything else, but I think that the ECR20 is an entirely failed protocol. I think it's way too simplistic. It does not incorporate the measures for safety and security and transparency that are actually needed. Hristo, if I gave you 90 seconds in a Red Bull, you could probably make a new token, distribute it out, make a minting page, and there we go. And that's a problem. And I think that it should take some time. I think that I'm in the regulation camp as well. I think regulation is about, consumer protection. Doesn't always get there. There's a lot of politicians that do stupid things, unfortunately, and they're going to do stupid things no matter what. But if we're not able to kind of look at ourselves and say, like, that's great that we made the ECR20 and Ethereum's on it, and, anyone can make their coin. But if we can't say, we're going to make more advanced controls and then get the exchanges to say, look, we're going to just abandon any of these other things. It's not about consumer choice. It needs to be about consumer protection. Hristo, you see so many projects. I just want to kind of stick on this point for a second because, Ben made a coin, and immediately rug pulled everyone, and despite saying he wouldn't, and there was nothing stopping him from doing so, like nothing.
Yeah, absolutely. And again, I completely agree with you on this point that essentially, and we have regulation is the thing even stopping mass, I would say, institutional adoption at the end of the day. Because when you are a big company, when you want to enter the space, you want certainty above all. Even when you are a smaller business, the most important thing for a business is predictability and certainty. And really a regulation, yes, sometimes can somewhat hinder the business, but it really gives this level of certainty that you need in order to operate. And really, I believe that this is crucial for the next level of crypto adoption. We are all talking about now tokenizing real world assets and whatnot, but yeah, we need to have then a regulation similar to the one that we have for them as well.
And I know there's so many people that work on this problem. I mean, we at yWhales, we have a RWA project called FinRamp. We work on it quite a bit, and we fly around the world and we meet with regulators. And the challenge that we run into is exactly this case: is that everyone refers back to generally they point to a token and they say this has been a problem. We tried to address this, and almost every single time it relates back to an ECR20 protocol. And again, that's a base format that can be adjusted. You can do lots of things around it. But I think we built an early ecosystem, and I think that's very indicative of what we saw. Patrick, you were very much around for Web 1. There was a lot of early protocols that entirely got abandoned once ICANN showed up and said, okay, we're going to standardize a lot of these things. In the earliest days, email, if you had a Prodigy account and you had a CompuServe account, you had email on both of those, but you couldn't send in between them for a long time. And then, AOL showed up, and around the same time, ICANN made some things happen, and suddenly they became interchangeable. And I think we're seeing that right now. We're seeing such an early stage, and just because someone has gotten people's attention, just because they've made money, doesn't mean that they're right. And I think that that's the biggest point that I'd love to kind of hear your aspect on this, and then we'll go to some other stories. But we've seen failures from so many of our heroes. We saw Terra Luna, Do Kwon was heralded on every magazine cover as a genius, and the entire thing was a house of cards. Sam Bankman was invited to the U.S. Senate and Congress, and speaking to every single person, and he was a massive thief on the back end.
Well, AJ, I'm going to remind everyone who's listening that there is something like 10 senators and 25 congressmen who are felons, and like 50 or 60 DWIs in the House. So
yeah, I mean,
our regulators aren't immune to that as well.
Yeah, but I think it really showcases that, how do we, and this is an opinion, this is just our opinions, how do we start to put sunlight, which is the best disinfectant, onto these projects, onto these leaders, and really, again, you can trust. But how do we add verification? Because that's what this entire movement of Web3 is supposed to be about. Correct?
Well, here's the answer that not a lot of people are going to like. It's just time. Right. The Gartner came up with something, that has been prescient in almost every industry 30 years ago called the hype cycle. And if for those of you who've seen it, it's a big spike when there's new technology and it starts to prove itself and it looks like it has a future. And that's when, your Sam Bankmans jump in and you can get rug pulls and you can get all that because people are so excited. They don't want to miss the boat, right? There's definitely FOMO going on. And then we drop down into what's called the trough of disillusionment, which is probably where we are right now in crypto, right? So you can almost look at it and follow BTC's price from maybe 2016 up and down, and now we're back here somewhere. And then there's this sort of long, steady climb out, and with that comes the leaders in technology. You see consolidation. We're already seeing it in the mining companies. You start to see new technology come out, new protocols, things getting converged. The user experience gets much better, but it takes a lot of time to figure out who the winners and losers are going to be. And it's not something that happens overnight, especially with regulation. So I think we're in that trough of disillusionment and
Yep.
starting to head upward, which is good.
Absolutely. Hristo, any comments? I think we got a Hristo, you good? You can hear?
Hristo? Yeah, I think
that's okay. All right, we'll keep going.
Some music on. he doesn't like the Gartner hype cycle.
No, that's good. That's okay. That's why it's recorded. They'll edit this part out. All right. So pulling back in, and I think this is really important. So on the topic of regulation, and really on the topic of there's a large movement of self custody, but institutions are just not on board with that. So we're seeing a lot of lawmakers are telling the SEC that they need to approve Bitcoin ETFs. I wholeheartedly agree. I think this is the right play. I think this puts proper custodians in play. I think it prevents rug pulls. It allows these to be insured assets. And really, if you're a Bitcoin maximalist, and I'm not, but I really do believe in Bitcoin above any and all other digital assets at this point right now. I think we want to see these as something that you can invest in, that the corporate balance sheets, which has always been the goal, 1% into Bitcoin, can happen through a spot ETF. But it's not something that's been previously allowed before, especially in the United States. Patrick, this is absolutely in your wheelhouse.
Yeah, and Jay, I think people have been pushing for it for especially the last 5 or 6 years. You have a lot of private wealth management companies, not just corporations, but you've got. I mean, you're coming to Zurich next week, but when I talk to people in Geneva at these leading banks, they're saying family offices want to hold 3 to 5% in Bitcoin, but they're reticent to do it, and they want to do it through an ETF. And so I think legislation is starting to go in our direction, and clearly, once you have that sort of seal of approval that Goldman Sachs has an ETF that's been approved by the government, I think you'll start to see much more adoption. And it's coming at an interesting timing because of what's going on with Bitcoin. We've got the halving in April, and I think there's going to be an interesting reaction prior to that as companies want to get on board, maybe before the halving takes place, and because we always see a lot of shakeout after each one.
Yeah, and I think this also goes into when we really think about like where things are coming, like holding digital assets. If we, and again, in our FinRamp world of where we spend it, we believe, you can still be compliant with existing laws. You don't need new laws in place, because an asset just has to be properly custodied. So what you lose if you go with like MiFID II regulation is you lose the ability for self-custody of a security. Yeah. So depending on how these things, but banks, have been custodians for centuries. And I believe that, while there's a small percentage of us that believe that, 12 or 24 words is all you need to hold your life savings in there. I think that banks, we want to help usher them into this new ecosystem. We want that transparency of knowing, not just are they holding our assets, but what else are they holding on their books? Because we've seen such a big, banking crises. And, Hristo, I'd love your comments on this here.
But
banks
Jay,
adopting blockchain technology. Oh yeah, please.
I just want to clarify one thing. We're talking about ETFs being held by a bank. Individuals can hold specific assets themselves in custody. So I think that's a major difference, right? If people still want to accumulate BTC or Solana or whatever, they can.
Yeah, what I was trying to say is, I think people absolutely can. I think there's a small percentage of people that will. I think that you're going to see that 98% of the world's population still believing in the financial ecosystem as it exists. But my question I'm passing over to Hristo is, banks adopting blockchain technology is just a net positive for all sides. It's a net positive for the financial institutions, and it's a net positive for consumers because you have that transparency and that trust, but verification factors. But I'd love to hear your opinions.
Oh, absolutely. I agree 100% on this one. And I think the core thing here is the user experience. I'm not saying that there is a great user experience in all the banks, but compared to the user experience that we have right now in Web3, let's be honest, the user experience in Web3 right now is terrible, meaning I can never get my mother to hold a crypto token because at the end of the day, I cannot explain to her that she needs to save the 12 words. She needs to not write them down on a list on her laptop with a note that if she loses them, she loses all her money, and there isn't a single person in the world who can help her recover them at the end of the day. And this is something which, let's be honest, it sounds scary, and I agree that it is scary. And I have taken great precautions for my passphrases, but even I have seen really technical people, really people who are technically savvy, really get scammed in a very simple way, like a website opens and all of a sudden a MetaMask interface opens and asks them, you know what, we need your 12-word phrase again. And they input it and they get all their funds stolen, which is absurd. And having banks so that we can have regular users who are not obsessed with security and who can just delegate their security to somebody else, I think that this is a huge win for both for the industry and for the banks as well.
Yeah, and I can give a very quick story. On that exact point is I had my wife's Venmo got hacked, and her Venmo was attached to the her bank account, and they quickly drained quite a bit of money. Through there, they maxed it out over 3 days before she found it. One call to the bank, and within 3-4 hours, the money was back in the account. Everything's done. Everything's fixed. Not a problem. That's the banking, and that's the amount of insurance and regulation that goes into there. I talk to people every single week that have their crypto wallets hacked, and they're like, well, how do I get this back? And it's like, nope. And I've had people that I've talked to that have lost upwards of $9-10 million. And some of these people are still months, years later trying in any way, shape, or form to get any percentage of this back. And the answer is generally like, you've gone outside the traditional finance ecosystem, which is why, circling way back around on this conversation, why I think large family offices and institutions want a spot ETF, because it is insurable and the custody is done through proper custodians. Because even people that understand this very well, as you said, Hristo, we've seen a couple people in our industry that lost access to wallets, that they were custodians. Like, that was their business model, was to be the custodian, and they don't have access, or they lost, or these funds. So I think it's a very scary world we live in, and I think that there's a couple things that need to be fixed, and wallets is the first and foremost.
Definitely, and now we are seeing definite improvements with this. I cannot quote the exact protocol which was implemented with the latest upgrade on Ethereum, but enabling, for example, to have 2 or 3 people which can make a transaction instead of you in case you lost your accounts, or having multiple multi-sigs on each account where, for example, if you hold a large amount of money, essentially 3 or 4 people need to sign the transaction, and having this kind of a separation between a cold wallet with a multi-sig and a hot wallet, this kind of financial literacy and financial discipline, once we start moving more towards it and once it becomes the norm, then sure, it will be great. But before that, we need banks as intermediaries, and probably it's very likely that we'll forever need them, at least within our lifetimes, I believe.
Yeah, and right now, let's remember we're still talking about the entire crypto industry. Is a tiny percentage of the world's assets. We made it all the way up to $3 trillion. Came crashing back down. I think we're right around $1 trillion, so we're down about 2/3. But that's nothing. There's single banks that are larger than that. I think the Rothschilds have more money than that. So now I'm going to get hate mail on that one. But the entire goal is that, when I say that we're early, like we all need to be working towards a common goal. And so one of the news stories that I want to bring today, and near and dear to my heart, is that they're trying to create a tokenized asset coalition. It's great. I think those are the right things that we need to see. We want to see, the leaders get together, and this is the tokenization asset coalition. Includes Aave, Centrifuge, Circle, Coinbase, Base, Goldfinch, and a couple other small people. And the problem that I have, with this one is not that they're not trying; it's that you need the large institutions to be involved in this. Like if you want J.P. Morgan, who's one of the largest asset holders on the planet, to get behind this, they need to be at the table and they need to talk about what works for them. They've built Onyx. Onyx, I'm not going to say whether it's a success or failure at this point, but they've put a lot of time and energy and money into this with their theses. And so I really like the fact that there's now conversations about like we're not ready to digitize securities.
Mm-hmm.
There's a lot of work that has to be done around wallets, around bridges, around these chains, to make sure that we're compliant for wherever it goes forward. Because no bank is going to accept like, oh, we can't get access to all your assets anymore, or they're just lost. Hristo, I'm going to jump back to you on this one because, you spend a lot of time on tokenization and tokenomics. And so I'm sure you talk to a lot of large clients, what's the thoughts they have behind, actual real world assets?
Actually, it's quite interesting. I believe that I am definitely seeing an uptick in people who want to do that. And essentially, there is a prevailing opinion, at least within my circle of tokenomics experts and people that I connect on LinkedIn, that real world assets are likely the next big driver for the crypto space. And to a certain extent, we are all expecting this. So, for example, right now, I have a client who is looking to tokenize several buildings within Iceland. And within the constraints of MiCA and essentially already having defined how an asset-backed token might look like, we are right now discussing from a legal perspective, okay, can we have a building and then tokenizing the building and having an asset-backed token? And I think that those are amazing possibilities which we can have, not only for traditional financial assets like bonds and whatnot, but also for actual asset-backed tokens which represent things in the real world. The thing which I still feel that we lack is the exact infrastructure, as you mentioned, and really for having this done in at least in a semi-decentralized way. Because if we put away decentralization entirely, it is not that big of a problem. Again, you have a custodian. This custodian has the responsibility to handle this, and then you issue a token which represents something within the custodian, either shares or something else. But I think that what this coalition needs to solve, and what I'm hoping that they're solving, is exactly the decentralization angle on this, because I also see Aave there and really how the two things can work in unison together.
So Hristo, I got a question for you. Like there are a number of stocks that are tokenized, right? You can buy the token of Apple stock, which is an individual asset, right? Like it's an existing asset. What's the gap between financial assets versus real world assets?
So you mean by the gap we are talking about the difference between a financial asset like a bond and the building which I gave as an example, or?
Yeah. Like so a stock, a share of Apple stock or the the tokenized version of an Apple stock versus the tokenized version of Jay's Office.
Essentially, the one thing represents a cash flow generating asset, and the one thing is a security by definition. The other thing, obviously, Mika is trying to explore it as something different than a security itself. Obviously, we can talk about anything. We can have Jay's office and we can have a REIT on top of Jay's office. And those essentially are two different things. One thing is the financial assets representing it. The other thing is the brick and mortar thing. And at the end of the day, it really depends on what will the token represent at the end of the day. So let's say that we tokenize Jay's office and we issue 1 million tokens which represent it. The core question is, with one token, what can I do? Can I go and take a brick out of the office? Can I go and take Jay's microphone? What does this token actually represent? Because if it just represents cash flow which Jay can generate within this office by paying rent, then yeah, it doesn't have that big of a difference. But the real interesting question is, if we are not looking at it in the terms of a financial asset, what can the token itself represent? I cannot give you a definitive answer on this at the moment. We are still exploring possibilities and talking about it, but it's definitely an interesting thing. One thing that we are discussing with the project that I mentioned are the rights of building on the plot of land at the end of the day, meaning that can we tokenize this? Is this an asset-backed token or is it a financial thing? And it opens all sorts of interesting questions, which, to be honest, we are searching the answers for. I cannot give them readily available.
You know, I think one of the thing I want to throw out there is a lot of people, whether they're very experienced like Hristo or, you know, they're just kind of, you know, casual traders like you and I, most likely, Patrick, is like, we understand if we go on the NASDAQ, the Dow or the S&P, you know, like we're buying a share of a company, but that doesn't give us rights to do anything other than they may send us an email to vote on something that our one or two votes, you know, may or may not have any power on, but we kind of don't have any disillusion of like, I can go walk into, you know, Tesla and say like, I am a shareholder and I demand to, like, none of that there. With crypto exchanges, it's a massive mess of like, some of these things are stakeable. Some of them might be real world asset potential tokens. You know, they don't even know what these things are. And so I think we haven't really defined categories. You know, we use words like ICO to help, you know, kind of sound similar to an IPO. And so we really do a lot of this to ourselves. You know, we use these terminologies that sound similar to traditional finance, but those are highly regulated. Highly regulated.
The nomenclature in crypto is just, it's unbelievable, right?
Yeah.
If you guys remember Stephen Wright, the comedian, right? It reminds me of something that, you know, he would have created.
Yeah, you know, but getting back to the point, I think it's really, you know, hard for most people to understand. You know, you've got Bitcoin, you know, listed next to Ethereum, listed next to Doge, listed next to, you know, sometimes, you know, like an Aave, you know, type token, and those are like, each of those represents a very different investment and a very different investment thesis, and you can do very different things with those. So I entirely, like, I'm all about tokenization. Like, I am all in on Web3, but I think that we need to really take like 5 steps back. And I hope that we do not have to do this with government regulators and sidestep, because, you know, that's going to slow down everything or kill a lot of what we're trying to do. But, you know, the big gatekeepers, you know, the Coinbases, you know, the big exchanges, you know, really, I think need to step up and create enforce categories. Cause, you know, it's like, you know, this free and fair for all, like, hey, whatever you want to do, you know, make whatever you want. I think it's lost, and it hurts us more than it's helping us, in the race for capital.
Interesting take. I think I think it gets back to that long, slow grind, right? On the hype curve. I think you'll start to emerge, and some of the stuff too, Jay, if we're talking about tokenizing real world assets, but putting real world assets on the blockchain, and the term, I think, NFT now has a negative connotation, but I don't know anyone who uses it anymore.
Yeah,
exactly. I definitely believe everything's going to become an NFT. And it already is in a lot of places. So you know that I've been in Ukraine 5 times since the war started. And everything there is on the blockchain, on their phone. Their driver's license is on the phone, the marriage certificate, birth certificates. And so that's going to happen to us, right? Everything is going to become an NFT all over the world, just because the security is so much better and stronger, and the ease of use. So those things will start to merge together in whatever form they take. And then we'll have sub industries like you're talking about. We'll have DeFi, we'll have real world assets, we'll have categorization, and each one will probably have their own form of regulation.
Yeah, and again, I knocked on ECR20 earlier on in the show, but I think there's a lot of other ECR protocols that are amazing. Like 1155 is fabulous. Hristo, you could name 20 that are groundbreaking that nobody uses, and I think that's what I'm trying to get after is like we got to move past the ECR20. Like we've got to get past like the 2018 cycle of these tokens and everything else to get things that have more depth to them. If we want to talk about real world assets, it's impossible. We've looked at it a dozen ways. An ECR20 cannot be linked to a RWA. You have to have something much more in depth, and we're working on a lot of things there. So, but I want to pivot real quick because Web3 to me involves a lot more than just cryptocurrencies and blockchain, AI. And I want to take a second and really talk about this because I think it's going to revolutionize everything we do. When we're talking about having educated buyers and consumers, I think AI is going to bridge that gap. Being able to ask questions about these tokens, being able to ask about the contracts, being able to ask about what is backing them. Humans just are not going to ever take the time, and you can put all the information in front of them, but they want the easy button. Hey, this is my investment theses. Give me 10 recommendations, and which one do you think is going to do the best over the next few years? And that can only happen if you're putting the data on chain and properly formatting. So what I think is really interesting right now is ChatGPT. Which we talk about quite a bit, and it's had its ups and downs, its lefts and rights. But they've re-enabled. They pulled back for a while. I really enjoyed what it could browse Bing, but it showcased how bad internet browsing was. You ask a very basic question, and ChatGPT will give you an answer back. Sometimes it'll lie, but it gives you a very well formatted answer. And then they connected to the internet, and then all of a sudden it was like searching, reading, scrolling, going back, searching, read. I mean, it was just like over and over to like I can't find it, and it's like, well, welcome to what life was like as a human. They've re-enabled it. They've added a visual search as well, so that you can put a diagram. I tried it this morning. I put one of our diagrams for one of our ecosystem token designs in there, and it absolutely kind of extrapolated some information out of it and was able to talk intelligently. So, I'll jump over to you, Hristo, real quick. How integral do you think AI is going to be into this movement here?
To be honest, as I mentioned at the beginning, I have been a data scientist for 12 years, and I was doing machine learning models, and ChatGPT was the first thing that really excited me for a while in the space when it came out. And I really feel that moving forward, it has a really long way to go. Again, in the analogy which you were making earlier, that we are in the year 94 of the internet. Again, I would say yes. This is the Yahoo of AI. We are still waiting for the Google search engine of the AI. And although I am already using it. So when we are creating, even we are working with projects, we are creating token economy papers. It can speed up research by a lot. And for example, I was using more the chatbot within Bing, which I think is still open AI based because it also provides the sources from where it gets the data. So I can go and I can double check the information which it gives me. But if I need to research market size, if I need to research an industry, it goes there, it gives me the figures, it also tells me where it got them, and I can open and just double check that this is the correct figures, and I can say I like those sources or I don't like those sources. I think the biggest thing which needs to come in order for this to work is that right now it is a very one-sided conversation. And what I mean by that is that people are not great at asking questions. So essentially, AI needs to learn to ask for context. So if I go and say, what is the size of this industry? I need that ChatGPT comes and asks me, okay, why are you asking? Are you doing a research? Are you doing a paper? Are you doing something different? Why do you need that? And I answer it. And then before giving me the results, ask me a few more questions to get the relevant context so that you can provide the needed information. And I think that then we can even teach people to start asking questions, which is critical, and phrasing their queries in a correct way. And this would be the big leap after that, in my opinion.
Yeah, and I hope that people take the time to learn prompts, because like most people don't even understand how to properly search in Google. Like there's a lot of keywords and prompts you can do just inside of a Google search that, vastly increase the accuracy of your searches. And most people don't do them. They just type in a one sentence. Patrick, as the other non-data scientist on this call, I easily now can pick out like when it first came out, I was like, oh my God, this is amazing. Yeah. And then it became really quickly that I can start to see when people are just sending me ChatGPT.
Everybody's email. Yeah. I hope this finds you well. And, you can definitely tell when someone said to ChatGPT, hey, how do I pitch this CEO on buying my shit?
Yeah.
Right. And it all comes out the same. You can totally see it. That's why I was saying with Hristo talking about the data sources. So I use it a lot because we're trying to get them onto landfills that haven't converted methane to electricity because it's too expensive, and then put our system on top of it, which both captures the methane and creates a economic incentive for the landfill owners. So it's a brilliant idea, and I've been doing just that. The research Hristo's talking about and trying to find these landfills, find out how much methane they're getting, how much waste they're coming in, to know future production. And it's like AI. The critical thing you guys mentioned, both of them with AI, are number one, the data sources. Where's the machine learning from, and where's it's getting its data? And then number two, the prompts. But you're absolutely right, Hristo, that it once we have context and once it starts to understand context, it'll be much more powerful.
Yeah, we don't have the article listed here, but I did see that Sam Altman, sent a tweet, and he just said, hey, AGI has been achieved internally. Hristo, do you mind just kind of, going over, really quickly what that phrase, potentially could mean?
AGI should stand for artificial general intelligence. So the core concept is that AI is generally specialized. It can do one thing. At the end of the day, what ChatGPT does, and I like this definition a lot, is that it is a stochastic parrot. It just, you give a prompt, it tries to understand everything which is written and gets one word and gives you the next word which has the highest probability to follow the first word. So at the end of the day, it is just about working with data, working with text. Artificial general intelligence should be able to solve problems, meaning you should be able to present it with a problem, and it should be able to solve it without being specialized in a particular field. Now, I haven't heard this quote from the person. Sorry, just forgot the name. But anyway, most AI experts agree that we are probably at least 10 to 20 years away from real artificial general intelligence, and this is when it starts to become a little bit scary. But it's very interesting if we are there already. I just doubt it a bit.
Yeah, Andrea was kind enough to go find that article while we were talking, and he's backtracking now, saying he was just making a meme. I'd like to call BS.
He should be in crypto.
Yeah, well, don't worry, he is. He made WorldCoin,
right.
So he's the ultimate, kind of crypto guy right here. So there's a name that I hope kind of comes and goes, which is the WorldCoin iris scanning. We got to talk about that for a few times. And did either, Patrick, you over in Europe? Did you do the iris scan?
No, I did not.
Did you know anyone that did?
I know a couple people who did, yeah. But I've been a security freak since server vault days, so
yeah,
I want to keep Minority Report out of my backyard.
Absolutely. It's we talked to some people right when it first came out, and I think the most the thing that kind of really killed me about WorldCoin is I'm like, okay, it's a security feature, and I can see the theses behind this, but it turns out that if you lose access to your wallet, you can't go get back access to your wallet by doing it. It just gives you a whole new one. I'm like, what's the purpose of this?
Yeah,
like, if it's just saying you're a human and here's a wallet, and then you go back and it gives you another wallet. Anyway, there's enough problems with WorldCoin that governments are kicking them out of the countries. But I do want to spend a little bit of time while we have you on here, Patrick, talking about kind of some of the larger mining things that are coming down the pipe. Because whether you believe in cryptocurrencies as real world assets or anything else, Bitcoin is Bitcoin. Bitcoin is the last big proof of work coin. And I do believe that, the Bitcoin community will continue to move the needle towards green and a lot of other things. That being said, MicroStrategy bought another 5,400 Bitcoins, spent another $150 million. Absolutely love Saylor. He's not slowing down in any way, shape, or form. But, Patrick, at this point, isn't it strange that he hasn't just converted to mining these things as a technologist?
Well, I think, Jay, what his thesis, and I've known Mike for 20 years, right? His partner who started his company was on my board for 10 years, one of my companies. And what his thesis is that he can buy things cheaper than it costs to make them. So, depending on the swings and timing of the buys, he's buying at a lower price than people can often mine at, and especially how competitive the mining industry is now, right? There's really 2 or 3 miners that are going to be here next year, and that's just because it's so competitive. So I think it's too much hassle. There's too much commitment. There's too much in terms of building infrastructure, and it's just easy for him to buy the lows.
And he's upside down, or not upside down, but he's underwater on his total stack, which is a lot of Bitcoin.
It's a shitload of Bitcoin.
Yes. So, and the other, Hristo, do you have any, thoughts on this? Cause, we see a lot of these publicly traded companies, and I know people that have for years, bought stocks of companies that hold Bitcoin, because the stock value was underneath the value of the Bitcoin that they held.
I'm just concerned in this whole thing that I think that he holds like 5 or 7% right now of the total supply. If I'm not wrong, maybe I'm misquoting totally, but some kind of figure like this is within my head, and I'm really concerned in case the company goes under for whatever reason and they really need to liquidate this. This is my major concern here, to be perfectly honest. Definitely something that I don't want to see. So just that.
Perfect.
And Jay, I've got to jump to the National War College, which interestingly enough is quite concerned about the projection of power through proof of work assets, and it's a really interesting topic that I hope we have time to delve into sometime more. But I think on the mining front, not only companies that have concentration, but mining concentration. Russia's gone up considerably since the war started in mining Bitcoin. And we've seen, Jay, you and I have seen people from Russia looking for millions of dollars of mining equipment, which hopefully they're not getting. And, even on a smaller scale, take it down a geography, Texas is incredibly, powerful now within the U.S. in terms of density of mining, particularly since most of the people in Georgia, which was about the same size as Texas, their power purchase agreements have made them, basically stop because they're again unprofitable. But the last interesting thing that I want to see, how it plays out is BTCS, Bitcoin Spark, which is a new token that's coming out with some sort of a hybrid between proof of work and proof of stake. And I think they call it proof of purpose or proof of purchase or something like that. But
yet another thing for us to figure out. And track.
And I haven't, but it could be, they could be the the Hotmail or the AOL, right? It could be the evolution we're looking for. I haven't had a chance to dig into it yet, but
perfect.
Just something interesting to look at. So
we appreciate your time. Yeah. No worries. Well, and I'm gonna stick around with Hristo for a few minutes, but we'll catch up with you soon here, sir.
Excellent, Hristo. Great to meet you. Thanks for your time. See ya.
Bye, Patrick. Perfect. Great meeting you.
So Hristo, and really we've only got 1 or 2 articles left, so I want to run through these with you. On the On Arbitrum, they're now trading Bitcoin mining power. And I don't know exactly how that works or what happens. Can you explain what they're trading there?
Essentially, we have done a couple of projects like that. Again, I'm not in detail on what exactly they're doing on Arbitrum, but usually we have seen several projects where people can just purchase mining power from one company which is offering it, for example, as a cloud service or as with anything else, and you have a token representing each unit of hash power. And essentially, the company would go, they would mine them, they would deposit them within a pool, and then the people who have stake within this pool, they can either mint more tokens, essentially like purchasing additional hash power with the previous one which they had, or pretty much just cashing out and getting the money for doing this. For me, this just creates some very interesting market for additional derivatives on top of that, meaning that essentially I can see how this over time can produce like additional stable coins, additional other financial derivatives, and I'm quite interested to see how this develops, as it is quite interesting. Obviously, you have the problem of centralization, meaning that the person who is providing the particular service, you need to be sure that he is diligent and he is doing the work.
I think this really showcases, going back to, circling way back around to the first conversation we had, which is we haven't barely scratched the surface on what the new financial ecosystem is going to look like. And to be clear, most people have no idea how complex the existing one is today. There are people that specialize in trading assets that would make your head hurt. Like it's these nuanced little, fractional bond, wrapping things. And, there's so many times that I meet people and I talk to what they do in the financial industry and I'm going, that's a thing. Like explain more. Like I want to learn. And so what we're seeing now is some of those same concepts being brought to blockchain. And I think it's really interesting because right now they're not interconnected in any way, shape or form. Some of these traders, they work in a very small dark pools. You never see what they are. What they're doing is entirely legal. They're, some of them can be, trading mortgage-backed securities, some of them can be trading, all these weird things. But now suddenly we have blockchain and we have the ability for things to be traded in a clear day and be, having liquidity pools where you can interconnect these assets. My thought to you is like, really in your mind, because you're at the earliest stage of tokenization. You're talking to people before they tokenize assets. You're talking to people as they're considering how do I properly represent this insane thing that we do, that there's maybe 1,000 people on the planet that even understand. How do they properly tokenize this? And my asked question to you is, how long do you think that this process will take? Do you think that this is years or decades to convert the global financial ecosystem to blockchain?
It really depends. It really depends. And for me, the core problem which I'm seeing is that traditional finance and blockchain are still very much at odds, meaning that there is no acceptance on either side. If we can reach some kind of acceptance and agree that each system has its merits, then I think that we can shorten this transition and this evolution by a significant amount. If we continue to pretty much reinvent the wheel, because I'm really seeing how in the blockchain industry we are repeating some mistakes which were done in the traditional finance industry maybe 100 years ago, maybe 150 years ago or whatever, and we are just repeating some of the things there because there is just no integration between the two. So really for me the biggest goal is, okay, let's shake hands, let's agree that both have merits, let's work together and see what is best done in the traditional finance world, what is best done on chain. And it is not that one is categorically superior to the other. Let's figure out which does what, and let's have cross industry experts within both, and then we can obviously accelerate the maturity of blockchain in terms of finance and the maturity in traditional finance in terms of transparency and accountability.
If we can get TradFi people to listen to just that clip, I think they'll have a very much better understanding of what we're trying to accomplish here compared to just coins and memes go up. Because again, circling back around, you are from TradFi, you understand their world very, very well. And I would say you're probably one of the most educated person on tokenomics in the space and understanding what blockchain brings in here. So I really thank you for that. That was very insightful. And on that note, we're going to go ahead and bring this to a close. Hristo, thank you so much. Patrick had to jump out a few minutes early to go present to a very large council. And again, on the concept of Bitcoin and blockchain and why really every country needs to be exploring this and helping to adopt regulations, existing regulations into this new technology. So Hristo, thank you so much for your time today. yWhales, wherever in the world you are, we will see you guys next time. Thank you all. Talk soon.
Thank you. It was a pleasure being here.